Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us at the MarketSide studio, we have Rory Read. He's the CEO of Vonage. We're here to discuss investing in AI and cloud businesses. Rory, it is great to have you with us. Welcome to Trade Talks.
It's super exciting to be here, especially as we see spring emerging in New York.
Yes, it can only go up from here.
That's true.
Let's talk about that. Are companies still heavily investing in AI and cloud business solutions?
Yeah, there's no question. We see a choppy, volatile overall market. We've seen market growth rates come down over the past 12 months, but the market itself is still growing, mid-high teens to even touching 20 from time to time. So we think this is just a short-term kind of next 6 to 12 months. What we're doing is focusing on managing OpEx and really investing in the product. Long-term is still up and to the right.
Well, let's talk about Vonage and the products that you're offering now, because
Sure.
the company certainly has evolved.
It did. There's no question. It's a cloud communications platform that delivers APIs. So this idea of small bits of programming code that allows it to be embedded into anyone's application, from ride sharing, telehealth to retail delivery, any kind of messaging we can deliver to anyone around the world. That's what Vonage does. Vonage does that. So if you get a notification that your car is coming, or you're in a video with a doctor doing a telehealth, you're doing it with Vonage more than likely. And we do it across the planet. 5 billion smartphones around the world. We're delivering that capability to anyone, anywhere. And we allow every vertical and every industry. They've got to interact with their customers 24/7, anywhere they are. This is a migration that's going to occur. It's going to go from transactions to conversations and ultimately 360-degree engagements in the digital world. It's merging physical and digital worlds together right now. That's what Vonage does.
Yeah, and the velocity of the speed of how quickly it's merging is really quite impressive. You had mentioned it's global across every sector. Let's talk about headwinds with the economy. If there's any impact to the business, or just your thoughts on the macro environment in general.
The macro environment is choppy, no question. It'll be volatile for a period of time. We're going to see this kind of flow through for the next 6, 12 months. I don't think it's over immediately, but I've been in the tech industry for the last 3 or 4 decades, believe it or not. I've seen this, 7, 8 times. It will pass. And in tech, when it turns sharp and up to the right. So we need to be ready. What we're doing is managing costs, making sure we don't get ahead of our skis, and make sure that we're doubling down in terms of the product capabilities that we're going to deliver. Differentiation. There's also a market dislocation, and some valuations have dramatically come down. Let's target. Can we go do some M&A that really enhances the product? With the coming together under Ericsson, we're in a much different situation than many of our competitors that may not make it through. With Ericsson's support, which is a great company, we can go after this. Invest in the product, look for market dislocations where we can pick up assets at the right price, and we're going to take advantage of this. Downturns are opportunities, no question about it.
Well, I'm glad you brought that up when it comes to M&A, because not only in the public sector, but in the private markets as well, valuations had to come back down to earth, right? I mean, profitability, revenue streams,
important things matter.
Board governance, sound management teams. We're seeing how important that is. It almost feels like it had to happen in a way.
Well, for almost a decade, a lot of entrepreneurs built some marginal businesses on free money. I mean, money was really inexpensive to get. What's happened is over the past several quarters, we've seen a refocus on cash flow, really sustainable business models. The beauty about Vonage is we have a combination of businesses that are really quite stable, and we can continue to invest and grow while leveraging some of our historical businesses. Businesses need to really focus on creating sustainable models. Free money's kind of over for now.
Right.
Entrepreneurs will adjust their models, there's no question, but there's going to be some fallout here over the short term. No question.
But I mean, what is your advice for entrepreneurs? Like you said, you've been in tech for the past 3, 4 decades. Cash flow and proven revenue streams and a good balance sheet seems like it should be that way regardless of what cycle we're in.
You've been in the industry a long time too.
Yeah.
There's no question. That's a good business. You can use free money to invest for growth, but the fundamentals of every business, cash flow, a differentiated product model, really building a sustainable model, that's the winning proposition. That will always carry the day over time. In cloud communications, this is going to be in every industry, every vertical, and what we're going to see is the winners and losers set over the next 5, 7, 10 years. Vonage is in a great position, and with Ericsson, which is a great company, we have the support and the reach now to introduce a whole new set of APIs based on global network capabilities, exposing the network. That's differentiated, that's first moving, and make sure you're profitable from the get-go. Build the business that's sustainable, that produces value, you'll win.
All right, Rory, we appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.